Okay, good evening, guys. In today's webinar or in today's session or lecture video, we'll be talking about the forecast we made weeks ago on our fellow pairs, dollar index, Euro USD, GBP USD, Bitcoin, and also NASDAQ and US 30. So we'll be looking at the previous forecast we made on these pairs, and we'll also be making a new forecast for the coming week, right? Then you can get to ask me any questions you've been holding up for weeks pertaining to technical analysis and the chart itself. The first we do, as our custom is, we do start with dollar index. Well, we can see I've not edited anything, I've not changed anything. If you go back to the previous video on our weekly webinar, you can see all the annotations are still the same. This is daily time frame, and I taught you guys how to get a good. Wait, is anybody else not hearing me? Can anybody else hear me? Because I believe my mic is working very fine. Okay, then it should be your network. Okay, let's continue. So, like I said, I taught you guys, I cannot remember the particular lecture, but I told you how to get the bias for the coming week. This thing is like an holy grail, like a holy grail, like magic, like I told my previous my private students. Once you just spot the premium and discount of any swing or any range on the chart, it doesn't matter whether it's crypto, whether it's forex or stocks or anything indices. Once you spot the premium and discount, once you're able to spot the premium and discount, trust me, you'll be able to find where next the market is going to. So first on dollar index, we have price come to take out this relative equal lows. So you see we have sell side liquidity here. Price came to take out this relative equal lows and starts buying. After it started buying, it created a swing low and a swing high, then started retracing. Now at this point of retracement, that's triggering or like that's the trigger to tell us that price is creating a swing low and a swing high. Then we go ahead and use our gam box or Fibonacci to find the premium and the discount. And like I said, the premium is always above and the discount is always on top. While the equilibrium is the middle, what differentiates the premium and the discount, right? And what does price do? Price will always come down towards the discount and go back up to the previous high if it's buying. So something like this, price will always create this high after taking after taking an old high, then come back to the discount, exactly what dollar is doing. And this is exactly what I said weeks ago. I mean, we're not patient enough to allow dollar come to this sell side liquidity. And you can see I use this eye icon as like a target that I want to see dollar index inside that discount. And once price is coming to the discount, it doesn't just come to the discount. It does what? It takes out a draw on liquidity inside the discount. Now, if price was buying, so if price was selling, price will go to what? To the premium, take out the draw on liquidity in the premium and sell off. But in this case, price is very well bullish on NASDAQ. Don't allow anybody tell you otherwise. Now, price comes to the discount, takes out the sell side liquidity inside that discount, and now we are bullish. So where next am I seeing dollar index? Well, if I take off this tool and just do this, I can tell you with fact that I want to see dollar index back to the high where it came from. It's just pure fact and pure technicals. That is the algorithm, right? So price comes to take out the sell side liquidity. Now, like I said, I cannot tell you exactly when price will do this thing, but once it's time, it could take a month, it could take 2 months, 3 months, but that is exactly where price is going to. Now you see, we traded into this sell side inefficiency by sell side imbalance, buy side inefficiency. That's the CB or fair value gap, and we sell off. Now you're waiting for price to do exactly something like that. If dollar index can create a what? A BC, a buy side imbalance, sell side inefficiency, or a fair value gap, and price trades into that fair value gap, that becomes the fill that takes price to this high. And you can see it's a relatively equal high. You can see that we have this high here, we have this high here, which makes it relatively equal, which I also say it's a priority to the market or to price. Well, I'm going to leave these annotations here like this. So when next we have this webinar, you're going to see exactly what price is going to do. Price is heading for that high. That's to say that every other thing that's quoting dollars is likely going to be bearish for a while. Well, that's that for dollars. Let's look at Euro USD. So this is Euro USD, and this was the annotations we did before on Euro USD. And you can see how price is playing opposite to what dollar is doing. Now, price created a swing high here at July 18 and created a swing low at October 4. After that, we have a swing high and a swing low. And if we pick the GAN box, that's telling us that price will go back towards to the premium in order to sell. And you can see what price is doing. Price already traded into the premium of this range. Now, taking out this buy side liquidity, it's starting to sell, just like how Nasdaq, just like how dollar index is starting to buy. Sorry for the little distraction. I just have to remove somebody. Sorry for the delay. I just had to remove somebody. Thank you. Well, like I was saying, price created a swing high and a swing low on what Euro USD, and in this case, you're expecting price to trade back towards the premium in order to sell, and this is exactly what ICT teaches. If you want to know market profile, if you want to know where next price is running to, or where price is coming from, you just need to figure out the premium and discount of the current range of the market. Now, what is the premium and discount of this range? I'm teaching you how to do this. Pick up your Fibonacci or your GAN box to mark the swing high and the swing low of this range. That's one leg, or any how you want to call it. Now, what is the draw liquidity that's sitting in the premium if price is bearish? Now, for Euro USD, we have a buy side liquidity here, and price is targeting that. After selling off, what are we, or where is our target for this sell off? Well, it can be really simple. Euro USD is simply coming back to this low. Euro USD is simply coming back to this low. And this is exactly the same thing many traders trade. You see, it's liquidity to liquidity. You can see now price is going from this buy side liquidity to the next sell side liquidity. But they won't tell you the context of these things because you think, okay, because it's liquidity to liquidity. So people will go ahead and choose liquidity that's in a discount instead of a liquidity that's in a premium. What am I talking about? Okay, let's look at this. Let's look at this little playbook, right? Let me remove these annotations. Now we have what a swing, a range. We have a range. Now in this range, if you fail to identify your premium and discount, you can as well start marking all of this as what? As a buy side liquidity. Now, because they taught you or you read a thread somewhere about liquidity to liquidity, you don't know or you get confused about which liquidity price is going to use in this case. Now, let's say price takes out this liquidity and it starts selling off. But what happens? Price keeps on going further. You can see that. So after price takes out that liquidity, so people they start selling off because what? That's an inducement, or maybe this is somebody's order block or somebody's what? Supply zone. And you can see price will always purge that. You can see price will always purge that. It's very, very important to identify the market profile of the current state of, like the algorithm, what is the algorithm currently doing? Go to your daily time frame, find the nearest swing high and the nearest swing low. This is the easiest way to get the buyers, guys. Trust me, it works like magic. Just find the swing high, the swing low. Once you get your discount, find a draw liquidity that in the discount if we are buying, or in the premium if we are selling. Now in this case we are selling, so price needs to take out that buy side liquidity that's in the discount, that's in the premium. Now after that, we are going to see a little struggle here because this is a favorable gap. Don't forget that. So we're going to see a little struggle here or pullback or something. Then price finally comes down to the original sell side liquidity, and that's where why you have liquidity to liquidity concept. So this is what I'm expecting for Euro USD price coming down to this sell side liquidity. Although we might see some consolidation or reaction or whatever in this case. If you watch ICT market maker model, then you understand why I say that I need to see some consolidation there, right? Now let's look at GBP USD. Now GBP USD is already in motion of what we wanted to see, but has not yet taken out a buy side liquidity in the premium. Now, like I said, to understand the market profile, find the swing high and the swing low. Now we've gotten the swing high and the swing low on GBP USD, but price have gotten to the discount and the premium very well. Yes, price have done that, but price have not taken any sell side or any draw liquidity in the premium. Now, what do I mean by draw liquidity? First, the draw liquidity could be an old high or old low. The draw liquidity could also be a fair value gap, and you see price is not respecting any fair value gap there. A draw liquidity could also be another block, and I can clearly tell you that that is not another block to be respected. And a draw liquidity could also be a mitigation block or a breaker block. Now, in this case, what is price likely doing here? If for somebody that understands the concept of liquidity or engineered liquidity, I think whatever they call it now, you understand that price is creating what? Relative equal highs. Now, some people are trapped with the idea that, okay, this is an order block. Let's buy there. So let's sell there. And there are people that are currently in this position doing this right now. I don't know if you're one of them, but on GBP USD, some people are currently doing this. Let's say swing traders or whatever. They're currently doing this right now, thinking that idea of their supply or their other block will hold up. Well, see what's going to happen, because price have not yet taken out a buy side liquidity inside that this premium. And what I'm expecting for price to do is purge out the sell the stop orders that are there. Price is coming for those stop orders. Now I might be wrong, but I'm going to hold up to that statement if it happens, because I'm still expecting price to take out these relative equal highs, which are also priorities to the market. Now, if price should do that, then we are looking for a sell. But without confirmation, there's nothing to do. Now let's look at US 30 before we look at NASDAQ. So US 30, this is the daily time frame, right? And this is the daily time frame on US 30. And I think I've cleaned the annotation, but this was what we discussed previously, I think, on a previous webinar. Price comes for this sell side liquidity, then you can see we start buying, and price goes forward for the original liquidity, which is this buy side liquidity. Now in this case, price have not started any retracement of any kind, so we don't have a range yet. We don't have a market profile yet for this particular market. In this case, we are still bullish. You understand what I'm trying to say? Because price haven't taken out an external liquidity for it to start retracing. Now, some people, you might think that this high is supposed to make price start retracing from there, but trust me, it's not, because that is not an external liquidity. This is an external liquidity. What I mean by external liquidity is that this is the high that holds up all of this price action inside here, all of this price action, all of this. This is the high that holds up all of those price action, which makes it what? An external high. I really want to believe I'm making sense, right? So once price takes out this low, you're expecting it to take out an external high. Then from there, we can decide if price will start retracing. Of course, you'll be able to see it. Then this will be our swing low, and wherever price starts retracing from will be our swing high. Then we will have a perfect premium and discount where price could come to trade into that favorable gap, then continue the bullish movement. So in case you are hoping to start selling US 30, it should not be a long sell. It should not be a long sell. It's very important to understand these things. These guys are not going to explain these things for you in their Twitter space, in their threads, or in their free videos. They will want to give you some kind of basic things so that you can join their class and all. But I'm not doing that. I'm glad to be sharing these things with you because I want you to see this market the way I see it. And you study these things, put it together, you surely make a strategy out of it. Trust me, and this is exactly what I'm seeing for US 30. So US 30 is still bullish, if that's what you want me, if that's the statement you want me to say. Not a financial advice, but US 30 is still bullish. If you are looking to sell, then it should just be, those intraday sales, which you are taking profit at the first or the next liquidity. No wholesales for long. But if it's buys, I think you know what to do with that, right? Let's look at NASDAQ so that I can give you guys a chance to ask questions, right? So on NASDAQ, this is what we talked about weeks ago, that price will come for this outside liquidity. In fact, this one I knew it like months ago, not even weeks. This happened around May 31, and since June, I've been talking about these things on almost all my forecasts I've been uploading on YouTube. If you think I'm lying, go to my YouTube channel, check each and every forecast from June, and just skip to the end part where I'm talking about US 100. You see that I've been outlining this particular liquidity there since June, July, August, September, October, where price finally came for that outside liquidity. And after price targeted that, as I say, that no highs or no lows or no liquidity in the market is forgotten. So it doesn't matter how long it takes, price will get there, right? And you can see what NASDAQ is doing. NASDAQ have already taken out an external low. Sorry, that's not outside liquidity, that's buy side liquidity. NASDAQ have already taken out an external low, right? And in this case, what are we waiting for? Very simple. Find your range. Price have not started retracing yet, but of course, you will know when price start retracing. Then this will be our range. Price is still going for that high, so it's not a retracement yet. But if or when price retrace, you know your discount, you know your premium. Just pick out these two, find your premium and discount. And in that case, you know if you are bullish. Once the idea of getting a bias is for you to understand which particular trade you should be able to hold. Let's say I'm in a bullish market, let's say price is being bullish from this point to this point. In this case, I am not going to be holding a sell trade for too long. It's very, very important to understand these things. Even though you become the liquidity, you fail to identify the liquidity, you sure help become the liquidity. What do I do? I will hold my buy trades for as long as I want to hold them to the next liquidity. Let's say I pick a buy from this low, right? I'm not closing that buy till it gets to somewhere like this high. You get what I'm trying to say? So if I pick a buy from this low, my target to be this high, somewhere like that. This is a daily time frame. So I'm talking about if I pick a buy on the lower time frame, you get something that I'm not going to close my trades early because I know price is bullish at this point. But if I should see a sell trade like this day exactly, you see November 9, that was a sell trade. If I should see a sell trade on that intraday, I'm going to make sure that I don't hold that sell trade for long. I could probably close that trade on the previous day low because of what price is bullish. So if you see a sell trade like this day where price was bearish, because of course, because price is bullish does not mean that every single candle is going to be green. That's what I'm trying to say. You use the intraday AMD or the power of 3 to identify what the day is going to be, but you use the daily bias to find out which part of the market you're supposed to be on for long-term for home run and targets. Like, you get what I'm trying to say. So you don't end up closing an early trade where you could have made more profit. That's the reason for buyers. I think many people have complained to me recently that they will see a trade where they will pick and they'll close at 2R or 3R and the trade end up being 8R. This is your solution right here. If you understand buyers, then you will not be closing trades early. Let's say we are bullish, right? And you pick a sell trade, you close it early. There's a justification for that. But if you pick a bullish trade and you close it early, then you don't understand the bias because the bias is bullish. Now, in this case, the price start retracing. I know that price isn't going to be bullish till we get to what? Till we get to the discount. So if I pick a bullish trade within at this range, from this range or this sell-off, if I pick a bullish trade, I'm not going to be holding it for long. But if I pick a sell trade, that's one I can hold. I hope you guys are really getting the idea of everything. So this is all my forecast I have for the coming weeks. Let's say for the month of December or till whenever all of them hold. And when they finally do what I'm expecting to do, then we'll have another forecast. So if you have a question, now is the time for you to ask because I'm ready to answer whatever question you have. We have less than 10 minutes, so I don't want to hold this thing for too long. So people not not be bored when you're watching it on the YouTube channel, of course. If you have any question, something that have been troubling you, just go ahead, write an answer. Go ahead and ask. Sorry. Okay. Seeing that there's no question, I believe everybody understood my bias for the coming week. Sorry. All right. So I'm going to upload this recording on YouTube. So next you'll be watching the recording. It's going to be on YouTube. Now, tomorrow is Monday. Now, it's very, very important to check your Forex calendar. Very, very important to check your Forex calendar. I'll be trading on Monday, Thursday, and Friday for this coming week. Why is that? Because on Tuesday we have CPI. And for those of you that really know how I trade, you know that I stay away from CPI. And on Wednesday we have FOMC, and I do stay away from FOMC too. So Tuesday, Wednesday, I'm not going to be engaging in the market. But if you go to the 15-minute time frame on Nasdaq, you see where Friday stops, and all you're just waiting for and praying for is the Monday setup to happen. After that, you wait till Thursday to kill it. So I believe that you guys are really going to do, favor the market this week because I know you guys are going to kill it. At least you've known the buyers, what we are expecting for the coming week. You don't need Wall Street to tell you what we are going to be expecting on Nasdaq. I've just told you. Okay. So I'm gonna be leaving you guys. I don't take much of the time. And until next time, be safe.